Inflation is the punishment to savers. Why? You've saved, you've not grown the money.
Oops, inflation is a punishment to savers. Whew, that hit a nerve, I should say. Well, welcome to the SMB Inside. As today, we look at saving for investment. And our coach and today's financial advisor is none other than
Sharon Tumushabe. I'm the Vice President of Sales at Zeno Investment Management. My role on a daily basis is to help people plan, save, and invest for their goals.
saving for investment is clearly putting your savings into use. But is that all?
Saving for investment means you have this money today, so than you to just keep it on an account or at home, you actually get to invest it in an asset. So there are two types of assets. There's lending, what we call debt, and then there's what we call equity, owning something, shares, or if you own a business, then you've invested in a business. So you're a shareholder in that business. It could be lending. I have these savings, let me lend it to my friend to invest in a business, they give me a return. So you either do the debt or owning. And majority of the times, saving for investment means I have these savings, let me put them to work, let me earn a return at the end of the investment. Now, when you talk about investments, there is risk usually attached. So this investment you want to make, what risk does it have? Is it high risk, high return? Is it a low risk, low return? So you always have to look at that as you're planning to make these investments. So typically when you save, get this money and put it in an asset that is going to grow the savings, so that in the future, let's say 3 months or 6 months from now, you've actually accumulated some kind of return that helps you beat inflation. So moving your money through time. So we've invested 10,000 today. After 6 months, it has become 10,500 shillings. So that 500 has come because you've been actively investing this money. So saving for investment means don't just save the money, put it in an asset that is going to earn you a return at the end of a period.
When looking for how to invest your savings, what should one do?
The easiest way is using a professional. When you use a professional, you take away the hassle of doing research, the hassle of finding which asset to invest in, the hassle of calculating how much you're actually earning, lessing your expenses. So for somebody who has their savings, I would recommend them to actually go to a regulated fund manager. Now, a regulated fund manager has a license from the Capital Markets Authority. These are professionals that have gone to school, that understand financial markets or financial assets. They are able to guide you on how to invest for your short-term, mid-term, and long-term goals. So financial assets are investments that people don't utilize a lot because they don't teach us these things in school. You're either going to do a research on your own, and that's how you're going to learn that I can actually lend the government. I can lend my money to the bank without me just having a savings account. So these are things that people are not educated about. But there's investments, there's banking, there's insurance. So investments is when you put your money in an asset so that it grows.
But then, what happens once you are done getting this professional or financial advisor?
Once you find an advisor that can guide you on what kind of plan you need for your goal, it's always good to start with the goal. Why am I saving? Because there's an end goal. So you turn your goals into financial goals. I want to educate my child. I want to build a home. What is that thing that you want to save for? Is it a short-term goal? So if it's a short-term goal, then the way you organize your assets for a short-term goal is totally different from a goal that is 10 years from now. So you would find someone actually buying land, and they will need this money in 3 or 6 months from now. So, and then we know that land is a fixed asset. So are you actually solving that liquidity that you will need in 6 months? Was that the most optimal asset to buy? So, but once you know what the goal is, if you're buying land for retirement, 10 years, 5 years from now, it makes sense, right? So then do that kind of investment. If your goal is a short-term goal, 1 year, 2 years, 3 years, they're unit trust funds. You don't have to just save this money, invest it. The unit trust funds give you access to financial assets like bonds, treasury bills, fixed deposits, equities, companies that are listed on the stock exchange. You're able to invest in all these assets. So let's not just save. Let's also put this money to work by investing it in financial assets and other alternative investments. There is land, owning a business, but let's avoid to put our eggs in one basket. Please don't invest all your savings in that one business and that's it. If anything happened to it, we saw what COVID did to us. You have that shop. When COVID came, shops were closed. So how did you meet your short-term goals like feeding your family, paying rent? Let's diversify. Have some money in short-term assets like financial assets. Have some money in a business. Buy land. Diversify, like have different kinds of assets than just investing in that particular one asset. Because it's working for you today, it doesn't mean that even in the future it will continue working the same. So let's spread our risk and let's invest smartly. And people are able to actually get this advice free of charge. We have built a platform online that helps you to plan for your various goals. And you don't need to be a customer. We don't charge for it. It's free of charge.
Well, that's Sharon Tumushabe for you, the Vice President, Sales, Zeno Investment Management. If you're to just have it in a nutshell, saving is putting money aside, gradually, typically, into a bank account. And investing is using some of your money with the aim of helping to make it grow by buying assets that might increase in value, such as stocks, property, or shares in a mutual fund. There you have it, saving for investment. Till then, in our next SMB Insight.
Jerome Paul Shonko there was letting us onto that particular insight, and that drives us into a break. We return shortly. SMB continues.